Welcome to the 2020 first quarter AMA Town Hall. My name's Kenneth Bell. I'm the CEO of SCP Corp. This is the third one of these that we've done. We actually weren't going to do one this quarter because we thought that there might not be enough information to present, but really that was just being masked by all the disruption caused by COVID-19. And really, we did do an awful lot in the quarter. So I'm going to go through those right now, and I'm going to move pretty quickly. Anybody that's been through these knows that there's a pretty fast speaking because I try and wind these up in about 45 minutes if possible, and that will be no different today. If you've sat through the first couple of slides on Facebook, you can go get a coffee right now. It'll take about 5 or 10 minutes to get through these first couple of slides, and then we'll get to the new information soon. But I'm not going to pick up from where we left off because I want to go ahead and be able to record this. Okay, so the key thing that we show at the beginning of these every time we show in all of our presentations is we show this market opportunity chart. And the main understanding of this chart that's really interesting is that a lot of people would think that in global data creation that we might actually be further to the right on this chart than we actually are. But in 2020, the chart is still very flat. And in reality, the situation is very much so that data is being created dramatically, 47 zettabytes in 2020, but nowhere near what it's going to be in the coming years. And 5 and 10 and 15 years out, we're looking at a hockey stick growth because data creation begets more data creation. All of the things that are out there like lapel cams, body cams, security cams, various kinds of Internet of Things devices that are creating data, all are getting put onto medium now that maybe were being discarded before after a period of time. And so consequently what's ending up happening is people are starting to see, well, we can save this data, we can save this, and that chart begins to start to tip upwards as we go forward. I'm going to move past this pretty quickly, and we can get into some of the reasons why we think it's actually going to accelerate here in a minute. One of the things that happened this quarter, obviously at the end of the quarter, was COVID-19, and as it has for everybody, it's caused a lot of disruption to our project in some ways. But we've actually had some sort of mixed results. We've had some positives and some negatives. One of the negatives that happened is that when the pandemic hit in the beginning of March, or when it actually became a thing in the beginning of March, a lot of people made decisions to start focusing in different directions. On family, for instance, or on personal items, and maybe things that they were working on or doing, like our project, for instance, maybe decided to take a back seat on that. We had that in our case with two of our community folks, not our development team, but actually people that were related to community management and so forth. DR Mining and Master HW, both ultimately decided to focus on personal things and have essentially gone off to do those things. They're welcome back anytime in the future. I'm not sure what the role will be in the future, but they're, certainly welcome back into the community, and we can go from there, as has been everybody who's been involved with our project. Nobody's left in such a way on our side, at least, that they wouldn't be welcome back into the, project in some capacity. At the same time, we've been doing a lot of investment, gathering. We've been trying to get additional investment in the company, and some of that has actually been disrupted. We've had people who tell us, well, we're not going to be able to complete an investment, or we're not going to be able to take it on right yet. We need to see what's going to happen, and it's understandable. What's actually happened in the last intervening weeks is that we've gotten a little bit more clarity on some of this stuff. And there's a lot of money flowing out into the world right now in order to prevent a 29 style depression. And so consequently, as we kind of thought originally, we actually think that there's probably going to be more opportunity there. We're probably going to find that there's going to be more money available investing into our project after the pandemic than perhaps there might have been before. And part of it is because of that chart I just showed. And one of the things that happened, that was a bit of a positive for us, was with developers all working from home, where our cores were actually they worked at facilities before the pandemic. Now that they're working from home, they're actually finding more time to work on the project. And so we've seen a market increase in development on our product and project, simply because these guys are not spending as much time on the road or commuting back and forth to work, and ultimately they're putting more time in on the project. Work from home accelerates that chart that I just showed. What happens is, as you get more and more people working from home, you have Zoom video, you have all of the different networking things that they're doing. They're saving work to the network, and so they're creating a lot more data that needs to be stored somewhere, and typically it's being stored on the network in the cloud. And so that chart is going to get dragged forward by at least some period of time, probably a couple of years in our estimation. Bill Perkins is a high-stake poker player, hedge fund guy. He actually posted a tweet that I liked where he thinks, and I agree, that people are underestimating work from home, and they think that they're going to go back to work. They think that when a vaccine is available, that everybody's just going to go back to the office and everything's going to return to normal. And that's not going to happen. We're in a new world now, and the pandemic has essentially made it possible for managers and CEOs and comptrollers to actually look at the scenario and say, well, look, work from home is actually working, and saving us a lot of money that we don't have to put out in terms of commercial real estate, facilities, all of the utilities that go into powering an office. I think you're going to see a ton of downsizing in those kinds of places, and you're going to see that this work from home will end up becoming the norm. And as it becomes the norm, what we're going to see is we're going to see that data tsunami actually dragged forward, and specifically the cloud data tsunami will be dragged forward as well. Okay, so we're caught up to where we were before. Let's go ahead and talk now a little bit about what we did this quarter. And one of the key things that we did this quarter was we did a pivot from a waterfall model to a lean startup model. Waterfall model is you start a product design with a lot of specification work. We did all that. We drove that specification online. We talked to a few people about what a fully competitive AWS product would look like in a distributed network. And the idea was we were going to go out and we were going to get $500,000 to $1 million in investment. We were going to spend a year and a half working on the product, and then we would just come out guns blazing, with marketing and sales and do our thing. Well, that didn't really turn out to be a very effective strategy for a lot of reasons. The main one, as everybody knows, we've had difficulty getting investment. Primarily that's due to a couple of things, that we're very well aware of. We don't have a big track record in running big companies, and at the same time, this product is based in a crypto project to begin with. So crypto products and projects don't have the best reputation out there in the world right now. And ultimately, we ended up in a place where we got some investment, but we didn't get what we ultimately would hope to have received. And also partially that's because our networks are not all that big. Our investment high net worth, investor type networks are just not big enough. And so when we started thinking about moving over to talking to venture capital, what we realized was, well, we really don't have anything to show them except this PowerPoint and this specification, and that's probably not going to be enough for what we want to achieve. So we got this idea to pivot, and pivot's a term that's very well used in the lean startup philosophy. The lean startup philosophy is actually sort of a extension of the 1980s lean manufacturing world, where essentially you really focus on changing things up quite a bit differently from traditional models. And so in the lean startup world, what you do is you create to begin something called a minimally viable product, an MVP. You'll hear that term from us a lot these days. The MVP is going to be very rugged. It's going to be a very basic product. It's going to have some things behind the curtains that are done manually. It's going to be done in such a way to help you validate whether you actually have a real idea or not. Now, we're not building something brand new that the world's never seen. We're taking a normal idea, cloud storage for business, and we're actually tweaking it a little bit with a change over to a distributed network behind it instead of centralized data centers. And so consequently, we don't fall perfectly into the lean startup idea, but we still need to validate whether this idea of a distributed network can work. There are still some very big questions about it. Performance, latency, all of the various things about distributed networking. Are people willing to buy into the security model that we're talking about? So we need to get that validation. So in our view, what we realized we needed to do was we couldn't wait around for a year and a half to get a product out there. What we had to do is we have to get something on the street soon. And once we get something on the street, we can then determine, whether parts of it are working or not working. And then as we get that validation, we can iterate around it, change, fix, clean up, alter, edit, do whatever we need to do to make it work correctly for the customers, and then ultimately keep moving forward. If ultimately it turns out that the market doesn't want this kind of a product, then we ultimately will have to look at it and perhaps pivot again. I don't think that's going to be the case because we enjoy some pretty enormous benefits if we can get this product working to a minimal set of standards. One of the things that we decided when we chose to make that minimally viable product was to sort of bag a lot of the higher end cloud storage services that we felt like we would be able to come to the market with originally. So originally you heard us talk a lot about tiering, performance tiers, and so forth. In this case, we're going to focus on a very low stakes cloud storage, but one that actually takes up a high percentage of the amount of data that does get uploaded onto various kinds of media, backups and archival data. And one of the things about these two pieces right now is a lot of it's not getting uploaded to the cloud. A lot of it's going to tape archival and tape backup mechanisms. But tapes have their own problems and they have their own costs. And ultimately, if a cloud service provider can actually show companies a more productive way to back this stuff up to the cloud and do it cost effectively, we believe that that's going to change that landscape and that this is going to be a very good product to focus on first, because it isn't the kind of thing that needs immediate access all the time. Now, when disaster strikes and they need to reach those backups, you definitely have to have performance and low latency, but it isn't the kind of thing where the data is being accessed super frequently, and ultimately the incumbents like Amazon and Azure ultimately create even long access times, like in the case of Amazon's Frozen Glacier tier for backup and archival. It's as much as 3 to 12 hours to be able to access your data, which suggests that they might actually be using some sort of tape mechanisms on their back end for these kinds of cloud storage products. So that's where we're going to be focusing on the MVP. We actually have an initial evangelist customer, in quotes, which is a motion picture production company that has produced some pretty important movies that are out there. We expect that this summer we're going to be able to populate on the network somewhere around 100 to 150 terabytes of raw storage from this customer, which will then translate into somewhere between 150, 300, maybe even more once we start adding on redundancy. So we expect to see the network actually get populated pretty quickly this summer and maybe even saturated, and hopefully that will help us to grow the network much larger, much faster as we actually show real data coming onto the network. To talk a little bit about the funding process behind this, like we said, the angel commitment's altered with the pandemic, but we're in a position right now where we believe we have enough funds to ship the MVP. And what does that mean? That means we have enough funds to pay the developers to get the product out the door and to do basic iteration around the first launch. We also believe we have enough to then cover the Marcom and advertising stuff to do a basic product launch. Might not be quite as robust of a launch as we would have done if we had done the waterfall model, but that's okay. We're not really looking for thousands of customers out of the gate. We're looking for early evangelist customers that can help us validate that model. So we'll get the product out the door. We're still looking at a July time frame to get this product shipped. And like I said, there will be some things behind the scenes that will still be sort of manual. The product has some centralizing features built into it. In our waterfall original spec, our whole thing was decentralized. We had something called the relayer that would live at the customer's end. Ultimately, we'll still build that over the long term, we believe. But in the MVP, what's going to end up happening is customer wallets will live on our servers, and we'll populate those wallets manually. We'll take credit card payments from the customer, and we'll actually build the allowances ourselves internally with scripts and so forth. Later on, as we iterate our way into the relayer, what will end up happening is that component will shift off to the customer site, and that will happen all under the hood, with APIs to the exchanges. So there's a little man behind the curtain stuff going on in the MVP initially, but it really doesn't change much in the project. Again, talking back to sort of the vision and mission of the project, we're not trying to change the world of censorship. We're not trying to change the world. Decentralization just doesn't have the meaning to us that it has to a lot of projects that are more science projects in our view in the crypto space. We're building a real product, and the customer doesn't, in our case, the business customer doesn't care about decentralization. The customer cares about distribution in the network, the distributed network. What we like to say is that our key strength is we're taking the best parts of the crypto sphere, and we're building a product out of the best parts. And we're not focused so much on the things that really keep hanging crypto projects up and keeping them from actually shipping real products that take over any legitimate spaces. There just literally is no space where a crypto product actually outshines any other product. YouTube is still very much a thing. Facebook is still very much a thing. And these things are going to continue to be things. And companies are going to continue to use places like Amazon and so forth. But in our case, with the distributed network, by using a group of providers scattered across the globe, similar to the way Uber marshals drivers for cars or Airbnb marshals properties to sublet out on nightly or weekly or monthly bases, we believe we can build a network that same way. And by distributing the network out around the globe, we can achieve a lot of benefits and features that people in business will want to see, not the least of a significant, exponentially lower costs. We can actually do things with egress costs. Right now, if you look at Amazon and really focus on where you spend your money on Amazon, AWS, it ends up being on egress fees, as much as 75 to 80 bucks a terabyte. For egress for most companies, which is it blows the cost out of the water from what the posted price is, which is their 0.004 per gigabyte Glacier storage cost. Once the accountant gets the monthly bill at the end and sees that it's ballooned like crazy and goes nuts because they had no way to forecast that cost, they go crazy. And in our case, we can do a one price fits all, or not a one price fits all, but a single price for everything that you purchase, so that you're not actually being hit up with those egress fees. And we think we can bring that cost in exponentially lower than an AWS or an Azure cost right now. At the same time, there's actually higher security when you start distributing the network the way that we're talking about doing it. So people look at it and say, well, is our stuff maybe less secure because some guy is storing some of it in his bedroom? Well, the answer to that question is it's actually more secure than it is in an Amazon data facility. So we believe we can sell all of that sort of idea and notion, and we believe we can actually generate those customers very quickly. In that process, it changes some things about how we're focusing on being funded. What we're really focused right now on is just getting money every month. We have about a 25 to 35K cash burn on a monthly basis that we need to accomplish instead of the $600,000 that we were originally looking for. And as long as we keep hitting that nut, we're going to be able to get this product out there. And I think that as we get the product out there, that gives us a demo that we can take to venture capital. And then, at that point in time, we can get funded for higher amounts and we can ultimately do more. In the development sphere, not much has changed as far as the sprint work. We still have the same four sprints. They have changed a little bit. What we were originally calling a proof of concept is now actually the MVP, and the MVP is actually going to be a working product versus just a toy product that we could demo. Of the four sprints, one and two that we talked about last time were completed with acceptance. Those were prepaid downloads and key value storage, which both changed some things on the host software. A lot of that work is actually available in our repo publicly and under the open source licensing, because that's not the stuff that's ultimately going to be protected under closed source. Sprint 3 is nearly completed, and this was the benefit that we got from seeing work from home. Sprint 3 really got supercharged, and we plowed through it pretty quickly. This is the new Metafile architecture. We're working on a demo of it right now that we can show for acceptance. Hopefully I'll be able to post that in the Discord and show everybody what that looks like very soon. And then Sprint 4 starts up likely this coming week, which is actually going to be the S3 compatible API and web application. And that one is going to take a lot of time. It's probably going to be 150 to 200 development hours, and then probably another 50 to 100 in iteration behind it. But we'll be able to launch the MVP somewhere towards the end of that 150 to 200 hours. So we still think we're very much on track for the June-July launch, and that's kind of where we're headed. At the same time, our community development's been going crazy, and we have a lot of lag time in between releases here. But Rhinus has been working extremely hard to keep merging in all of the stuff. On the other side of the house, the project we forked from has a lot of developers working now. I mean, they're finally able to spend some of those millions of dollars that they have on people, and they're ultimately putting a lot of commits out there. Some of it's interesting because it's actually starting to focus on the large amount of tech debt that they've accrued. Some of it's stuff that we're not really as interested in, but still can provide some value to our community. And Rhinus has merged hundreds and hundreds of commits over, and we released 1.4.3 today that covers up to the other project's 1.4.8. And ultimately, there are some things in there that we think are going to be interesting, like public access portals, which is the Skynet technology. Look, it's a different direction. Ultimately, they're using Skynet along with something called MDM, which is a programming background, and some other technologies that they're working at the protocol level, that if you look at them, you can see how they are going to try and do similar to what we want to do with the relayer, ephemeral accounts, for instance. And ultimately, their goal continues to be, we want to do a decentralized way of accessing this, which to us always ends up putting roadblocks, latency issues, things that really don't need to be in there, that we can just sort of, work around by being a little bit more centralized, yes, but we can build the product to do exactly what we want it to do from a performance and behavior capacity without having to be hamstrung by saying, but it has to be completely anonymous, has to be completely censorship proof, has to be, we just don't have those limitations. So the nice thing about having a community client like this that does have their tech in it is that we kind of get the best of all worlds here. We're going to keep merging their software over, and the community is welcome to use it. And public access portals will go live. We have a couple of people running portals already. And we'll keep monitoring it, and we'll keep watching it. We're building actually on the US infrastructure, so we're not really building at all on the SIAD infrastructure. We'll be writing our own host software as time goes by, but we can kind of do a dual platform thing. And if it turns out that they end up achieving something that's pretty neat for us, then we can always go grab it. And we can use the network in both directions. So like I say, we get the best of all worlds here, and that we get the value of their stuff and we get the value of our stuff, and they can live side by side, and ultimately we can pick and choose, and ultimately I think build a more valuable network in the long run. We'll see how that plays out, but I'm willing to sort of bet on that, as you know, because I'm here. Community developer Vlidermaster actually has done quite a bit over this quarter for us. stepped in and actually forked over their portal template to do these public access portals. Got an assist from Raspi 45 to get that public portal software template working very well. So if you're interested in running a portal and you're a provider right now, then you should contact us because it's actually fairly easy to set up. We will help subsidize some of those things. There is some value there for sending links around. For instance, internally sending builds around is useful. So there's some value there, and he forked that over and got that working for us. He also spent a lot of time working on the UI because we ran into a real thorny issue because we decided to, in the same time we were rebranding the meta file directory, we decided to move it locations, and the UI got a little bit clogged up in that environment, and ultimately Vladder actually helped us very much to getting that working correctly on 143 so that it does correctly move the meta file directly and our directory and renames it to SE prime now from SIA prime. There will still be some SIA stuff in the open source architecture underneath there, but we're doing as much as we possibly can to rebrand. Most of the rebranding is done now, but there's still always going to be some little things deep down in the code. If you spot anything that seems like it ought to be changed and isn't, please contact us, and we can get that fixed. The other thing that Vlad did was he also created a King of Hosts timed leaderboard, so now we can actually look at a couple of things over a period of 3 months and come up with a top 10 list for our fun little King of Hosts competition. Everybody knows that Rhinus actually won the King of Hosts this last time, so that shouldn't ought to be surprising. He's been running a host on SIA forever and probably knows more about the hosting environment than just about anybody in both communities, and ultimately, so it's kind of a interesting thing, but it's a fun thing at this that he's actually the King of Hosts this period. King of Hosts is a quarterly contest, a provider that has very high stats in capacity, in availability of storage, and also in uptime and other metrics that we've chosen to include in that. Ultimately gets put into a category, and the winner gets chosen on a quarterly basis. They receive a stipend of coins and also get to live at the top of our Discord above everybody else, including the team. So it's a fun little program. Social media captain Gord actually has also gone kind of crazy this quarter. He wrote 6 project guides, which are phenomenal, and they're all on Medium. If you go into the project information under our Discord, we need to get them up on our website, and we will shortly, but right now they're on Medium, and links are all in there, and they're very good guides about how do you get started using the software, how do you get started being a provider, how do you get started if you want to use the community renter and rent to back up some personal files and so forth. And so very good stuff, helpful to the project, and exactly the kind of stuff we need from a community leader. And so thank you to Gord for being there and doing that stuff. He's kept a continued social media presence and updating the community about things, and he's also been a pretty good liaison in the Discord community, usually chiming in and chatting with people. He's also a storage provider and put some storage on the network. Community development over this quarter has kind of slowed down because a lot of the things we were working on last quarter, where there was a lot of third-party developer work going on, got completed, and a lot of that was like Vlad, for instance. The 2 big initiatives where community development is still very much in process and where we can still use more resources is we're still hoping for a complete Explorer rework. Cam the Geek and 420 Coop are continuing to grind on that. It's probably going to take some time, but we really thank them for their service in that area and that they're continuing to keep working on it. The Explorer is so critical to the project, so we're really helpful there. And Nate is actually starting to port over his tools from Sia. He's the guy that does Sia Central and Host Manager. Host Manager is just an awesome tool for keeping your provider up to speed and actually monitoring multiple providers. There's some really nice things in terms of being able to, sort of measure your stuff against a US dollar value instead of against the coin. So we're hopeful to see that over the next couple of months, and you can stay tuned in the Discord to sort of get info on that. The network status is still pretty much where it was when we left it last time. We've got around 60 providers, around 600 terabytes, and about 42 terabytes used. Oddly enough, though, even though this has been very static, we lost a lot of hosts and we gained a lot of hosts. We had a lot of churn this quarter. And that's because when the Skynet technology came out, some people decided to bail out and put their stuff up over there. But new hosts came up over on our side at the same time that people were moving over to that direction. So what I hope to see over this coming quarter is we start to push data onto the network, is we'll see more providers show up on our network. We paid 55,000 coins out in incentives on top of the normal rent payments that providers make in order to make being a storage provider on our network a profitable exercise. It is not unprofitable to store on our network. It is actually profitable because we are paying out an enormous amount of incentive coins. Even as a 17-year-old in Los Angeles does his worst to keep trying to sell our coin down, we still put out plenty of incentives to make up for it at this point. And I kind of joke about that. Yeah, it's funny that he's doing that, and it is what it is. It's really kind of an inconsequential thing, though, in the end of the day, because at this point we're still in the meat and the sweet spot of the coin emission. We're 31 million coins into the emission schedule. 40 to 45 is where inflation really starts to taper to a point where it gets interesting. But at this point, there's still a lot of block rewards being pulled out on a daily basis. Every block is 216 coins out to the miner that finds the block. So sell pressure is going to continue for the foreseeable future as miners need to sort of deal those coins off. At the same time, we'll talk a little bit about the crypto price in a minute, but the price being where it is right now is also a function of being only on a single exchange. But I'll talk about that here in an upcoming slide. I want to get to the mining a little bit further right now. So one of the things that we're seeing very clearly is that our hash rate continues to be very stable. Actually, we did have peaks back in the very early part of the project where hash rates were up to as high as 3 petahash. But look, 3 petahash is as large as almost any other crypto project that's out there, including some very large coins. Obviously not as large as Bitcoin or some of those, but some of the altcoins that are fairly large, 3 petahash is a big amount of hash rate, and being stable at 1 petahash is still a very strong situation. I mean, we're talking, a few hundred ASICs, expensive ASICs that are out there, securing the blockchain. So been very heartened to see that number continues to stay where it is. There's an unknown pool on our coin. They've been here since September. They don't look to be malicious, obviously. If they were, they would have done something long before now, but it's obviously not a profitable enterprise to 51 our coin at this point. It would be done primarily as a malicious thing. We're always vigilant for it. Could happen. Somebody decides they just don't like us enough, they want to try it. It could be a thing, but at the end of the day, we would restart the chain and it would go back, and it just isn't a thing right now that we have to be terribly concerned about, because at the end of the day, we're not on a bunch of exchanges yet. The product's not shipping. There's still network is still considered a test net as we're building things out. So there you go. The other thing that's happening right now is at the end of this month, we get sort of what is the official changeover in China and Asia into the rainy season. I've seen electricity prices over there now as low as 3 cents. But actually what's interesting is selling at 3 cents is currently about where the coin is selling for right now on the exchange. So if you're selling at the current prices right now, you're selling below or just right around the very lowest rainy season pricing over in China for mining the coin. So it actually makes more sense for most people right now to buy the coin than to mine the coin. and we certainly appreciate it if you go out and you do that. We're still working to find the right next exchange. As everyone knows that's been around for a while, we had some hiccups with the initial choices. Crypto Bridge really was a comer and looking like a good thing. Ultimately turned out to really hurt us in a big way. And actually cost us a fair amount of money in doing it. So we're not really rushing right now to find a second exchange. We know we can pay a small sum of money to get on a whole bunch of Asian-based exchanges, but they want money to essentially fake your volume. They want money to essentially play the game, and we're just not really interested in that right now. It's not really necessary for us. As long as people can buy our coin on South Exchange, as long as they can get it to populate their hosts, to do some community renting or whatever they want to do, but put collateral up on hosts is the big area for buying coins, then we're fine. And that's really what's necessary right now. Even once we ship the initial product, we're fine with having a very limited set of exchanges, simply because at the end of the day, what will end up happening is customers will give us a credit card number. We'll turn around and via API, we'll buy on South Exchange, with market buys. We'll buy crypto to cover that rent, and then ultimately, that's how the coin will actually, get used in the initial going. What I expect to see happen is, though, over the coming quarter, that we'll start to see more storage use, and in that more storage use, we'll start to see more coin purchasing. And as we start to see more coin purchasing, those volumes will go up in a way that I think will allow us to start to be able to open up a very good case with the exchanges we really want to be on, which are, Bittrex and even Binance USA, but the more mid tier ones as the next major one for us. Bittrex, Poloniex, some of those type people are the ones that we're really starting to look at to be the exchange that we ultimately get on. Between now and then, we're probably going to pay a little bit of money to get on one of these Asian exchanges, and we're probably going to let them play whatever game they want to play on it. It won't affect us. If they run whatever kind of wash trading in order to do whatever they do, then, nothing we can do about that, but we'll only do it to provide a little bit more liquidity to the Asian mining community so that they have access to an exchange that maybe they can't access with South Exchange. There is an area to talk about right now. We're coming to the end of the presentation that has been very interesting to us. So as we went through this whole process over the quarter, one of the other things that happened, I don't really want to focus too much on negatives, but we finally had something that I kind of knew that was going to come along all along. We had a big blowout with the project we forked from, and it was, I think, cathartic in a lot of ways, and probably on both sides, by the way. We came into this thing saying we wanted to be a friendly fork. I'd never heard of that actually happening anywhere, and it was unclear whether such a thing actually was possible, but we decided to try it, and we had some expectations of quote unquote support. Those got twisted around. I'm not sure why the leader over there seems to think we asked for them to write software for us, because we didn't. We're doing our own thing. We expected to write a second layer on top, abstraction on top of their code, but ultimately, we came to some pretty strong conclusions along the way that their code isn't going to work for us. They're going back and cleaning up a lot of the stuff in SciID, and that's fine, and I think it's great. But SciID is becoming a big Jenga tower in our view. It's got 4 years, 5 years worth of stuff crammed into there, and a lot of stuff that wasn't really right, and wasn't really the best. It isn't optimal code. Like this, the whole snapshots area, some of the file sharing stuff that they did originally is just not, it isn't the direction that we decided we needed to go. So ultimately, we really like the idea of what Luke did on his own site, where he built these tools called Us and Walrus and, the various server infrastructures that he's built to actually write your own client on top of. And so we're now at a place where we're writing 100% of our software. So the original idea of us supporting them was that we would keep one thing in place, and that was the SIA fund mechanism. And since we're not using SIAD, or we don't expect to use it for our product, for our money maker, yeah, it'll still be a community thing, but that doesn't benefit us. In our case, our product is going to be based on our own software. So we just kind of concluded that it didn't really make sense to support that. And then we had some things happen on their side that didn't make any sense. They completely censored us in their forums. So people over there aren't even allowed to talk about our project, which is sort of lol, actually, at the end of the day, in an uncensorable or world where censorship is supposedly frowned on. To censor the fork that's continuing to try and drive parts of your product, your project, really didn't make any sense to us. So, it just came to a place where we said, look, this doesn't make sense for us to give you this reward. If we ultimately go on and become successful, it's going to be on the back of the stuff that we've written. So we're going to do a hard fork in the fall, and the original 10,000 SIA fund, SIA Prime, SC Prime funds are going to be wiped out. And it's not just the software we write, by the way, but the SIA leader actually claims that they're not legit pieces anyway. He's called them unregistered illegal securities. So he's essentially said he doesn't want them. And ultimately, he's saying that he can't give them to anybody because they're illegal. And, he's made all kinds of bizarre cases on them. He's wrong, but it's okay. We're going to accommodate that, and we're going to remove those 10,000, and we'll go off and be our own project. They'll be their project, and the two have become completely divorced in most ways, and that's how we'll carry forward. What I do want to say, though, is to people that actually own those units outside of the Nebulous Corporation, you should contact us directly and talk, because we're going to try and find some way to ameliorate the situation for everybody, and I think we can find some amenable solutions for everybody. So if you are one of those people, please contact us. This is what the breakdown will look like post fork. 15,000 SPFs will be owned by SCP Corp. 2,500 are currently available right now as a no value bonus in our pre-seed investment round. So people that invest in our company get significant quantities of SPFs. And then we have 2,500 that are earmarked for founders, employees, contractors, and then that will be a number that will have to live, that 2,500 to be fed out to people for the years to come. So right now, the single best way to get a whole bunch of SPFs is to invest in our corporation, because we're giving away a lot of them to the investors. As time goes by, it's going to be a thing where, getting one or two of these at a time is going to be a really valuable scenario. So getting, 3 digits of them by being an investor in the corporation is a real powerful whack. And I think it's something that people are not yet quite understanding. But I think they kind of started to see that recently, because one of those investors actually, after the pandemic hit, found himself in a situation where he needed to do something a little different. And we, said, well, okay, let's go ahead and give you the ability to sell off some of those ones that you got in your investment. He put them up for sale, and they sold immediately. And they sold at a valuation that was above what we were predicting. And they not only sold at a valuation above, but there were people that were talking about being willing to spend even more. So, it's the kind of thing where, okay, fine, if the coin price is being sold off sort of, in our view, illegitimately, what's not being sold off illegitimately is these SPFs. People are correctly recognizing that this mechanism that is built to print SCP coins is actually worth money. And that's heartening, and it ought to speak very clearly to the value of the coin, and it actually should ultimately serve to change the valuation on the coin, because people are buying and paying more for these devices that print coins. That suggests that the coin is probably undervalued. I don't know how many more of these are going to hit the market. I don't think very many at this point. Nobody else in the investment world has asked me if they could sell their SPFs. And I have a feeling that if any more of them hit the channel and were available for sale, they would get snapped up very quickly, same as the last ones did. If you're interested in buying them, you can contact me, and I'll see if I can find somebody in this group that is willing to sell them. but it's the only way you're going to get them because we're not selling them. We are not making them publicly available for sale. We're not selling a security. They are not an unregistered security because we are not making them publicly available for sale. They are being given away as part of our investment pre-seed raise. But I think the price that a lot of them got sold at was around $250, and I think I heard some people were talking about selling them for as high as 500. So pretty cool stuff there. Want to cover this again? We'll cover this every week, every quarter when we do this. We still hold these three big wallets. The storage provider incentive wallet. This is an escrow wallet we're holding that contains coins that we will be giving our storage providers over the course of the coming years in order to keep our network profitable. As everybody's heard from me over and over and over again, incentives are the key to making this thing successful. I think there's going to be 5 or 10 projects out there that ultimately deliver a product, a working product in distributed storage to the street. And I think they're going to be fighting over the amount of storage that's out there, the spare capacity that's out there. And I think that it's going to take a lot to win those providers. I don't think you're going to be able to just sit out there and say, well, look, we have a better project than, project A. Because that's not going to be the case. Everybody's going to borrow from everybody else. Everybody's going to end up having about the same level of technology on running these distributed projects. And at the end of the day, the network is the thing. The network is the 95% part of this component. The network is the core of our project, not the client. The network is the core of our project, and providing incentives to always ensuring that we can keep that profitable for providers is, in our view, what we think is going to be one of the big delineators between us and the other projects. The exchange escrow is that big wallet that we kept from the original airdrop, and we keep hearing about it over time from the 17-year-old in Los Angeles. But the deal there is, as we've said, that number keeps coming down. Right now, if you take the current circulating supply, the last time I gave this presentation, the percent controlled by the team was 24%. It's down to 21. By the time we get to the end of the emission in 2 or 3 years, that number will be down around 10%, assuming we still owned all three of those wallets. Well, that's not going to be the case. The storage provider incentive is going to be doled out over time to the providers. So that wallet will drop. The exchange escrow wallet, as we said last time, is going to be chopped into thirds. A third of it is going to be turned into storage provider incentives and go along with that wallet. A third is going to be provided to various people associated with the project, team members, founders, employees, contractors, people like that. And we've talked about burning a third. We may find another use for that third, but we'll see what we end up doing. At the end of the day, no matter what, the team will not control more than 10% of the coins, and more likely the team will end up controlling somewhere in the single digit range, 3 to 5% tops. I say this because we keep hearing, oh, all we're doing is trying to get the coin value up so we can dump these big wallets so we can go buy blue BMWs and be cool people and scam everybody. And we've been here 18 months, and that doesn't make any sense, and it's certainly not anything that we're about. And if you look at projects like Ripple or XLM or some of these other ones, I mean, these projects have 50% of the supply is into the control of the team, and they still have a lot of value accrued to them. At the end of the day, we're not going to have much percentage at all. So that's the story there. And I want to thank everybody. What we're going to do now is we're going to shift over to our Discord channel for some live discussion with people that want to chat a little bit about what they heard today in the presentation. And if not, you can always come back and rewatch this. We'll put it up on YouTube and probably trim it down a little bit. And we thank you again for tuning in today.